Let's go to Mary Holm. Hello, Happy New Year.
Hello, Jesse.
Nice to see you.
Same to you. You too.
Oh, it's great to have you in for another year, Mary.
Oh,
How long have you been doing this slot on a Thursday?
Was it 2016 or
Must be.
maybe even 2015?
Almost 4
It's
years.
been a while.
Have you had a nice summer?
Yes, thanks.
Yeah, cool.
I was going to tell you one quick story that came from my
Great.
summer because I thought it was interesting. I was driving off the Coromandel with my friend, an American, Sharon, sitting in the front seat with me, and a car was tailgating me like you wouldn't believe, and there was nowhere I could pull over. Finally, I got a place where I could pull over, and I did. And as I did so, I opened my window and gave a certain hand signal to this guy. And Sharon, my American friend, said, "No, Mary, no, he might have a gun." And I thought that was really reflective of the difference between living in New Zealand. And I said to her, "Sharon, there are some guns in New Zealand, but they're not sitting on driver's seats, you know."
No.
Just goes to show, she just freaked out. She said, you're never aggressive to cars in America, where she comes from.
But the great thing about this beautiful country is you can give the fingers to whoever you want with no repercussions.
Well, hopefully not. No. Certainly not being shot.
The story I've been telling recently about my summer, it's not really a summer story, but I'll share it anyway, is so my kids went back to school today.
Yeah.
And, we love our kids and we try and strike the balance between like looking after them, but letting them find their own way in life. And my wife said to me, do you think we're doing too much for Daisy in particular? Daisy is 6. We were in the kitchen at the time. She was like, we get her breakfast, we get her oats out, we pour the milk, we get the frozen raspberries. Do you think that we're doing too much for her? And I said, no, I think it's okay. It's normal. And at that point, Daisy came out of her bedroom just by coincidence, and she said to us both, "Dad, do we have a fridge?" And I thought, maybe she could get to know this kitchen a little bit better.
Yes. And then when she's 16, she's going to be opening the fridge and it's taking ages to choose what to get out because it's a hot day and it's nice standing in front of the fridge. That's a real teenage
thing.
Say,
shut that fridge like I do to her mother. Okay.
Yes.
Now, Mary is here to talk about the review of Retirement Income Policy 2019, which is going to be more exciting than it sounds. Because Mary's an expert on policy and actually how it works out in real life. And it was released by the Commission for Financial Capability yesterday. And there's 19 recommendations, but 14 of those are about KiwiSaver. Mary has written a book on KiwiSaver, literally, so she's the best person to ask, are these good recommendations or not?
Yeah, and look, I'm biased because I worked with the Commission on these recommendations, so I think they are good. Of course I do. But I think a few of them are quite interesting and a little bit different from what we've been hearing about before. And one I wanted to zoom in on was called Small Steps, which would enable people to gradually increase their employee contributions into KiwiSaver. So most people are currently on 3, although some people are on 4% of their pay, because ages ago that was the base amount. This idea would be that for any new KiwiSaver member, they would automatically be put into what we're calling a Small Steps program, and anyone else could sign up for it. So that every July 1st, anyone who signed up for it, their KiwiSaver contribution would rise by 0.5 percentage point. So if they're currently on 3, it would go to 3.5, and then a year later it would go to 4, etc. Automatically on up to 10%. And at any time they can pull out and stay where they are, or they can drop back, so say if you lost your job or something like that, you might say can no longer afford this. So at any time you can go back to all the way back to 3 or wherever you want to be. But if you don't do anything about it, once you've signed up, automatically every year your contributions will go up by 0.5%.
Now, my immediate reaction is that that's quite good because I should be careful here, but most people would probably have a little pay bump every couple of years.
Yes, that's right.
Would that be true?
Yeah, I think a lot of people get it annually, don't they? Look, I don't know.
I don't know. But what I'm saying is that you might not even notice that 0.5% if your income is going up regularly.
That's right. I mean, if you're making $50,000, it would amount to $10 a fortnight. The contribution will go up $10 per fortnight, $5 a week.
And if you went up, I'm just going to do some quick maths here, but if you were given a pay rise from $50,000 to $55,000 and it went up $10 a fortnight, it might just about cancel each other out.
Actually, I'm never good at doing that maths that quickly.
I'm ignoring tax as well, but yeah.
But you're quite right. I mean, and even if you don't get a pay rise, having $10 more come out of a fortnightly pay packet is probably not terribly painful for most people. It's something that any new KiwiSaver person would automatically be in it, but they can opt out whenever they want, and everyone else would just sign up for it if they chose to. So we're not saying people have to do it, but currently there's nothing to stop you from doing it anyway. I mean, because it might be a while before the government picks up this idea, if ever. It might, these are just recommendations to the government. So there's nothing to stop a person from every July the 1st or at their own birthday or whenever increasing their own contributions. Although you can't do half a percentage, they currently are sort of whole percentage jumps. Having said that, you can still also just separately send money directly to the provider if you want to. Yes, or a regular amount every fortnight or whatever. So people can do this kind of thing anyway, but this would be automatic for people, and we just think it would be a good way for people to gradually increase their KiwiSaver contributions. And if a young person does it, it would take, I think it's after 14 years they'd be at 10%, going up from 3%, and stay at 10 perhaps. If a young person did it, they might end up with about twice as much in retirement as they would have if they didn't do it. So this gradual, it's based on this save more tomorrow principle that I think we've talked about before, that Americans have done research on and tried in workplaces over there. And what they've done there is you save more when you get a pay rise. But because KiwiSaver the people running KiwiSaver don't know when you got a pay rise. It's a similar effect.
I'd like to officially disown my maths of a couple of minutes ago. By the way, I've been doing it again in my head, and I was no idea. So ignore my arithmetic. Listen to Mary. I mean, that's good advice any week. Okay, so a little tick for that idea.
Well, not everybody. One of the criticisms I've already seen of it is that it might be just too hard for workplaces to run this scheme, which, look, I don't know, Jessie. In these days of pretty sophisticated computer programs, I can't believe that something like that couldn't be set up so that those who signed off for it, that each it wouldn't. Somebody said to me this morning, actually, gosh, payroll adjustments have to happen every April the 1st, and now you're adding one for July the 1st. And I said, okay, we'll move the whole thing to April the 1st and do it then, if you like. It doesn't matter what date it's on. But, I can't believe that there couldn't be clever computer program people who could set this up to make it work well.
Agreed.
Now, the next one was proposed by someone at the Commission a year or two ago, but it was just an idea that was put out there, and that's what they're calling sidecar savings. And we might have even possibly talked about it a bit back then, I think. But what they've spelled out here is an employee could sign up to get an extra 1% taken out of their pay. So if it's currently 3%, they'd go to 4%. And that extra money would be put into a separate account for emergency spending. So it would go into a little sidecar account that's not KiwiSaver as such. It's an emergency money fund that would grow until it reached $3,000, and then after that, if you're still having your 1% extra going in, and that would just go into ordinary old KiwiSaver. So you've always got $3,000 there, and then, of course, if you spend it, you have to start again raising it. But the idea is that it's money there for emergency spending, for when the car breaks down, when the roof starts leaking, things like that, that currently quite a lot of people are getting hardship withdrawals from their ordinary KiwiSaver fund to do that kind of thing. This would be easier access than It's quite hard to get money out under hardship withdrawal, and so it should be, because that's taking money out of your retirement savings, and you're never going to get anywhere if you do that too often. You're never going to get a decent sum at retirement if you do it that way. So this idea is sort of specifically to be money that can be spent on emergencies, and I quite like the idea of it, really. They did a trial on something like that, something similar in the Philippines, and that's worked pretty well for people. I actually think it might make KiwiSaver more popular in some ways, because it gives people not just their retirement savings happening, but they know they've got this $3,000 sitting there for when emergencies happen. And
retirement isn't the only thing you need to save for.
Well, exactly. Yeah.
And if you're saving in one place, you might as well do all your saving in one place.
And, some people, one of the negatives about KiwiSaver is the money is basically tied up unless you get into dire straits. This is so some people say, well, I don't really want to be in KiwiSaver because I can't get at that money when I need it, and this is addressing that issue.
If you were in a high-risk account, you'd want your $3,000 to just be in cash or something, wouldn't you? You'd want that not to be invested.
Yeah, that's a really good point, actually, that we haven't addressed in the review about how it would be invested. But you're quite right; it would be invested in. I imagine it'd be invested in the lowest risk fund that provider offers, which once again, there's a whole lot more administration involved. The providers might be saying, oh gosh, some people will have this and some won't, and on it goes. But we at the commission, when they were putting these ideas together, and I was involved in it, they had a meeting of providers and government officials and some other people involved in KiwiSaver, and bounced some of these ideas off them. And the providers, for the most part, they would quite like it because more money's actually coming in to their fund, and therefore they can charge more in fees, etc. On the other hand, it's more administration, but I'm not terribly sympathetic to providers' complaints, because, as I've said all along, they're getting a pretty nice deal out of KiwiSaver, with the taxpayers funding the scheme or partly funding the scheme. So I think they should.
They can live with it?
Yeah, hopefully. Once again, the employers might say, well, we've got to keep track of this. We've got to keep track of who's having the extra 1% coming out. But there's got to be a way to make these things work. Yeah.
Third idea
is to exclude fixed fees from low balance KiwiSaver accounts. So fees, in nearly every case, the fees a provider will charge between $25 and about $45 per account, plus a percentage of the balance. And that works fine for most people. But if you've got a balance under, say, $5,000, then that fixed charge of $30 or $40 makes quite an impact on your savings. So the idea is, quite often children have got accounts with not a heck of a lot in them, or people starting out, and it can be quite discouraging seeing how big a big percentage bite comes out because of that fixed fee. So some of the providers are doing this anyway. They're not charging a fixed fee on low balances, or they're doing it just for kids, it's
in their interests to foster a saving habit and to make people feel good when they first start.
That's absolutely right.
What happens?
Yeah. So it's So a good provider probably should be doing this anyway, and it'd be good to see that happen. I've got one more, and then there's this letter. Have we got time for that as well?
Yeah, I reckon.
Yeah. So the fourth provision, out of, as I say, there's about 14 provisions, so go and have a look online at the others. There's some other interesting ones as well, but the fourth one I zeroed in on for today is putting fee projections on KiwiSaver annual statements. So these days, people get an annual statement that, as of the last year or so, gives them an estimate of how much savings they'll have at retirement if they continue at their current pace. And the idea of this is also to say, okay, if you continue at your current pace in your current fund, here's how much you will have paid in fees by the time you get to 65.
I bet the providers like that one.
Well, yeah, they weren't so keen on that one, funnily enough. And then the idea would be to include a comparison of the average fee the fee on the average fund of that type. So if you're in a growth fund, we would have a look at. We would also present a number that says if you were in the average growth fund for fees, this is what you would pay, so that people can see whether theirs is a sort of above or below average and what sort of impact it would have, which is kind of neat. I think it would be good, useful information for people.
Agreed.
Yeah.
Okay, to a piece of correspondence. Hi, man. Can you please ask your Thursday afternoon financial expert if it is worthwhile me joining KiwiSaver? The thing is, when KiwiSaver first started, I was somewhat sceptical. I started to grow marijuana instead. Not to be a dealer, but a wholesale supplier to just the one person. The whole time I've kept my very stable job in my community. No one knows I've had this sideline. It all leaves my area every 4 months, and I continue working, volunteering at church, and just being a regular person. I live in a freehold house that's not too flash in a not too flash neighbourhood, though that is changing and I see more and more wealthy moving in. The thing is, with the pending legalisation of cannabis, my sideline business will likely come to an end. I'm mid-50s with no dependents. I've got money saved and manage an overseas trip every second year plus a cruise once a year. My salary is fine, and I'm sure I can manage on it, so is it worth me joining KiwiSaver? Regards, and I've signed it, not a librarian.
They've also put a PS which says...
The above is fiction, maybe.
The above is fiction, maybe. So it's all a bit of fun, and there's no way of knowing whether it's really true or not. I love the fact that I think it's a man, says he attends church. He's a good citizen, but he's got this little sideline business, and it's all kind of fun. But the point is, he says, should I, I've been doing this instead of KiwiSaver. Well, I would say he should have been doing both. I mean, why not all along? Right. This might be bringing him slightly higher returns, but talk about risk related to return. It's a fairly classic example of that.
I wonder if anyone does use their ill-gotten gains to put into KiwiSaver.
It'd be money laundering or something, would it? If you put it through. Well, they probably do, I suppose. I mean, it's always hard to tell which dollar's a which, isn't it?
Yeah.
This guy's got a job plus his little sideline, and then if he puts some money into KiwiSaver, we don't know which dollars it was. But
it was nice of him to take the time to write to you, though.
It was, wasn't it? Yeah, a handwritten letter, and yes, and the referendum at the end of the year might well change it all for him. So he better get into KiwiSaver now, I'd say.
Okay.
Yeah.
Mary Holm, thanks so much.
Pleasure, Jessie.
If you have a letter for Mary, you can send it to her via me. Email to jessie@rnz.co.nz. And Mary covers all sorts of different money topics. Sometimes KiwiSaver, sometimes not KiwiSaver, sometimes investment, sometimes budgeting, all sorts. So if you'd like to share your particular situation with her and see if she can give you some info or expertise, jessie@rnz.co.nz.
Can I just quickly say, I can't answer all letters, or not nearly all letters.
Yeah.
But so there'd be a big chance nothing will happen, but I'll always read them. Yeah.
Or more likely, you'll hear it in a column in a couple of months or something.
Possibly, but often not.
Yeah.
Yeah.
Okay.
Yeah.
But take your chances.
Yes.
Or, even better than that, search your topic in Mary's archive. You can do that on our website or on hers. But if you head to rnz.co.nz and search Mary Holm, you'll see all the chats that we've had with her over the last few years. And Mary Holm's website is maryholm.com, and she's also got her columns there. So, for example, if your question is like, I'm about to retire, is it worth me joining KiwiSaver? Well, she's definitely answered that question before. Or I'm about to invest in property. Would I be better to pay off my mortgage before I start investing? She's definitely answered that one before. So worth looking it up.